Welcome to another S&P 500 analysis. Today is October 24th, 2020. In this video, we're going to take a look at the S&P 500 and the market sentiment, also the internal, to see where the market is going. And I'm also going to show you a setup that I'm watching for the coming week on the S&P 500. Because if you look at this chart here, in the past 2 weeks, the S&P 500 essentially went up 100 points, went down close to 100 points, so it fluctuates almost 140 point up and down. And in the last 2 weeks, it ended up going nowhere. And it is only about, under 12 point from the close 2 weeks ago. So when we see a price action like this, typically it will lead to some sort of a price movement out of this consolidation or this inaction area. And we'll take a look at the S&P 500 using technical analysis to see is a breakout is coming or is a breakdown is coming. So we're going to take a look at where the market is going. So stay tuned. Now, before we take a look at the S&P 500 and do some technical analysis on the price action to see where it is headed, let's go and take a look at the market's participant sentiment and also the market internal to see what are the strengths or weaknesses and what is the bias from the market participants. And before I begin, be sure to click that thumbs up to help me promote this video on YouTube. That will help me a lot. Now let's look at the VIX. You see the VIX, once again, it's pretty much inside of this band, this zone here between 20 and 30. And even the VIX, it closed, it's at 27.55, and it's not that much different from the previous week close. I think the previous Friday close is somewhere a little bit over 25. And also the put call ratio, it is still underneath this 0.75 level and close at 0.64. So, as far as the greed and also the fear from the market participant, basically it's unchanged. Still pretty much sort of in a neutral zone, not fearful, not overly greedy. Basically, in the price action kind of showed that, right? It didn't go anywhere. Basically just, chopping around within a zone. And looking at the New York Stock Exchange up-down volume, we did see a little bit upside on Thursday with a 4.05 up-down volume ratio. And also on Tuesday, it's relatively okay at 2.67. But Friday is a so-so sort of up-down volume day because you look at this, it's up 11, almost 12 point. The up-down volume ratio is only 1.58. Now, the advanced decline, the daily advanced decline show a little bit of a strength. It did have, 1,000 plus more advanced than decline on Tuesday. And on Thursday at 1,166. And on Friday, it's only 872. And also looking at the New York Stock Exchange new high, new low, you see the new high, new low also came down. On Friday, kind of bump up a little bit. See, from Monday, it was 62 more new highs and new low, and Tuesday 56, Wednesday 36, and then Thursday 23. You see the trend is kind of going down, right? And then on Friday, pop up a little bit at 51. So, the new high number of 52-week highs is not expanding as well. So it's just kind of sitting there, in that neutral area. Now, the New York Stock Exchange cumulative AD line is showing a little bit of a strength because it is trending higher and getting back close to this peak here, while the S&P 500 is still sort of grinding below this 3,500 level. It is showing a little bit more cumulative strength in terms of the AD line. And looking at the NASDAQ market, the up-down volume is also weak. You see here on Thursday, it was only a 2.13 up-down volume ratio on a reversal day. And the advanced decline on that daily advance is only 894. That is nothing, right? It's not even over 1,000. And on Friday, we saw 825. And the up-down volume ratio is only 1.34. So again, the NASDAQ market is also not giving us any clue, based on the up-down volume ratio and also the daily advance decline of which direction this market might be headed. And the NASDAQ 52-week high versus 52-week low is not that much different from the New York Stock Exchange. You see the new high, new low. We see 97 on Monday and 45 more new high than new low on Tuesday, and 29 more new high on Wednesday, and then 23 on Thursday. You see the trend is turning down, and then on Friday we got a little bit of a pop to 45. So once again, the new high, new low is not showing much of an expansion in terms of the upside potential here. And looking at the NASDAQ cumulative advanced decline line, it's very similar to the New York Stock Exchange cumulative advanced decline. It is building up strength and it is trending up and try to take out this high here, while the NASDAQ 100 cash index been pretty much kind of flatlining around this 11,700-ish area for the last week or so. If we take a look at the sentiment and also the internal, the market is pretty much in a holding pattern right now in the last couple of weeks. It essentially did not deteriorate, or the market participant did not get too fearful or too greedy. So let's go and take a look at the S&P 500 cash index price action and see where the S&P 500 might be headed in the coming week. All right, let's take a look at the S&P 500. Here we are looking at the daily chart of the S&P 500. Let me zoom this in, and then we take a closer look at the last week's price action here. As you can see, on Monday, it came down and filled this gap here. This gap near the 34.29 area. We're looking for that gap to get filled on a pullback. And you can see that after it got filled on Tuesday and Wednesday, the bear remained to have control, although it is above the Monday's close. And it is setting up a little bit of an inside coil. We see that the bulls was trying to take this market up, and then near the close, the bear basically regained control and push it back down and close near the low of the day with an inside inverted hammer. So right now it's essentially, on the Wednesday and Tuesday, it was coiling inside of this Monday engulfing candle. Then on Thursday, we see that the bear took it down and took below this Monday's low. Then the bull kind of regained control and took it back up. So now all those people that shorted below this Monday low is essentially trapped. And on Friday, the bear was trying to regain control by pushing the S&P 500 down in the morning. Then in the afternoon, the bulls kind of regained control and took it back up and closed 49 cents above the open. So it's finished off with a hangman doji type of candles. Here are the scenario for next week. If it is unable to hold the support up here at 3428.92, then I'll be looking for this thing to come down, work its way down to this 3306.88 to fill this gap here. But if it is able to hold support, then I'll be looking for this thing to continue to move about the 3500 and toward this 3550, then toward the all-time high at 3588. Next week, there will be some FANG stocks such as Apple, Facebook, and Amazon be reporting earnings. So I'm going to be putting out a pre-earning video for those stocks. We'll take a look at those stocks' price action, what are the market pricing in for the post-earning move, what to expect after the earning. Keep an eye out for that video. And if you are not a subscriber, subscribe so you will get the notification when I have that video uploaded. Now, before we take a look at a setup that I want to show you to watch for the coming week and how to play that setup, let's go and take a look at the other market indexes first. So let's take a look at the NASDAQ 100. And NASDAQ 100, again, we're basically looking for this gap to get filled last week down here at the 11,576. And we see that on Thursday it came down and got that gap filled. And then on Friday, a hangman type of a candle with the bulls regaining control near the close in the afternoon. And you can see that also it took out this Monday low. So it kind of got trapped, a lot of those short that shorted below that low there. And right now it's appeared that the bulls got control. So in the coming week, if it continue to bounce off of this this support level here, 11,576, then we'd be basically looking for this thing to come back up and possibly test this 12,200 and work its way toward the all-time high. Now, if it is unable to hold this support, then I expect it to come down and possibly come back, break that trend line, and come back down and retest this 11,147. This gap, we're still waiting for this gap to get filled. But if it is able to get a bounce off of this gap fill, then this gap most likely won't get filled until on the next major pullback on the way down. And looking at the Dow Jones Industrial, again, the Dow Jones Industrial, I was basically talking about looking for support at the 28,000 level. And you saw that on Thursday it came down and got tested that level there and got a nice bounce. And it too, kind of trapped some of the short that shorted the Monday low. And although it's not as strong as the NASDAQ 100 or the SP 500, but the both did regain control of the Dow Jones Industrial at the close here, and it did finish with a sort of a hammer type of a pattern candle. So in the coming week, we still going to look for this continuation of moving up, and if you could take out this 29,000 level, then we basically are looking at this pivot high here at 29,199 on the upside. But if it is unable to hold this 28,000 level, then once again, we're still waiting to see this gap to get filled down here at 27,239. And for the transportation, we also was looking for this level here, 11,623, as a potential support if it pulls back and try to find some support. And it did get close to that level and got a nice bounce. And on Friday, it's a really strong type of a move. So right now, basically looking for a continuation move up. We test the all-time high at 12,000, 13.69, and possibly put in another new all-time high. Now, if it pulls back, then we're basically looking for this 11,623 to get retested. And if it's unable to hold, then we look for the 10,960 for the next potential support level. And for the Russell 2000, the Russell 2000, we were mainly looking at this 1610 level for support if it pulls back. And you could see that it, once again, it pulled back and dipped below that and got a nice bounce back up above this 1,610. So right now, it appears that it's going to come up and maybe retake this pivot high here at 1,652 area. So if you could take out this pivot high, then we probably could see it come up to this pivot high at 1698.90. But if it unable to hold up at that level there, then we're basically looking for this thing to come back down and dip below the 1610 and come back and test this 1572, essentially this pivot high here for potential support. Now let's go take a look at the S&P 500, that setup that I want to show you. Looking at the 60-minute chart here, and let me zoom this in and take a little bit of a closer look here on the price action. See that there is this trend line here. Last Friday during the last hour, book this trend line here. Actually, this is the last 30 minutes. Book this trend line and book above it. And if you take a closer look here, you could say that there is an inverted head and shoulder pattern with a neckline pretty much more like a zone. Okay? So you could draw the line like that also. And basically, if we are looking at this as an inverted head and shoulder breakout, and the major move would be let me draw this. So basically looking at this as a neckline here, then now you're going to use this tool here, the Fibonacci extension tool, and just do a little bit of a measure move, approximate measure move, and you see 100% measure move will be 35.15, and that's pretty much up at this pivot level. And this is close to the 80% move at 35.04, just above 3,500. Right, so that's basically what I'm looking at on a 60-minute chart. But here's the other thing: if we drill down to the 30-minute chart, right, to the 30-minute chart, and the same thing, we have this trend line, and essentially you see that 30-minute, that last half an hour trading before the bell, it broke above this trend line here. And also, if we take a look at this right here, you could say here is this inverted head and shoulder. So it's a little bit more like a fractal, right? It's a inverted head and shoulder on top of a inverted head and shoulder. Remember the hourly, the 60-minute head and shoulder pattern was this way here, right? That's the inverted head and shoulder on the 60-minute. But right now we're basically looking at the 30-minute on this here. So once again, it's basically the same measure move, right? We just measure and move this, and then move it, project that 100% up here, and pretty much getting this, above that 3,500 level. So if we take this, using the Fibonacci extension tool and do a measure move again, so you can see that it is get up to that 35.15 area. So here's how I would play it for the coming week, right? So here's that breakout line that we want to see. And when it breaks out above that neckline or above this high, I'm going to put a limit buy here, right around here. And I would put a stop beneath this low. And I tell you why. Because there are people that essentially are looking for this type of move. They want this thing to go up, and then come back down, and then, on the next breakout, and then put a stop underneath here, right? There's nothing wrong with that if that's the play. That's your game plan. But here's my reason for me to take this long when it break above this, this high here and on a slight pullback, because I'm not going to wait for this, come up here to make a higher high and then pull back and then try to get in on the next break. The reason why I want to take this this long is, first of all, we have this inverted head and shoulder breakout. That's one thing. So you ask yourself, well, what would invalidate this pattern, once it breaks out? If it breaks out and then it come back in, if it come back and take out this low, then you no longer have a valid inverted head and shoulder pattern. So that tell me that, hey, my assessment of a inverted head and shoulder was incorrect. So this trade is no good, because the trade is based on that breaking out of this inverted head and shoulder pattern. In addition to that, we see this low here, and here's a higher low. Here's the high. If it breaks out and take out this high here, then essentially I got a higher high. So now you ask yourself, well, what would make this higher high, higher low, this higher low, higher high to get invalidated? Well, if it come back below this low, take out this low, then you no longer have this higher low, higher high. So that's another reason, that I took this trade is invalidated. So now the trade is no longer valid. And that's why, I want to put in the stop beneath this low. So that's the reason for the, to take the trade here and put the stop here. That's what I be looking for. Be sure you click that thumbs up and help me promote this video on YouTube. Thank you for watching, and stay safe.